Good morning, trading world. It is April 6, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. I am about to get my vacation started, but I couldn't help but to come and say what I see. The title for today's outlook is Bonds and Defensive Sectors Breaking. Oh, by the way, and it's FOMC day. Now, a while back I told you about the range for the bonds, how if they break above a certain level it's not good, and if they definitely break below a certain level it definitely wasn't good. And we have that. The bonds just peaked out the bottom side of the range, which is choking the life out of tech. So with rates popping up, every professional money manager is finally thinking defensive. However, what happens when everyone runs to the life raft at the same time? Let me tell you, dissension and panic. Right now, all the money managers are running for the defensive sectors like XLU, utilities, XLP, consumer staples, XLV, healthcare. Now, I have talked about how tech and financials have the lion's share of the market cap or market control. But now money managers are jumping ship and running to defensive stocks. Eventually, the defensive stocks will break, become way too overbought and overinflated PE ratios, that there will be panic in those sectors and there will be nowhere to run and hide, and the market as a whole will enter free fall. From here, it may not quite be a straight down. There may be bounces on the way back toward that 416 and below. By the way, I forgot to mention, today is FOMC day. With that, let me bring up the key levels for today. All right, here we go with the key levels of the day, starting on the support side. The Jack support is going to be the 447 to 446 area. The Queen support is going to be the 445 to 444 area, and the King support is going to be 443 to 440 area. On the resistance side, we have Jack resistance at 450 to 451 area. On the Queen resistance, we have 452 to the 453 area, and King resistance, we have 454 to the 457 area. Being that today is an FOMC day and expiration day, we have the makings of a very volatile session ahead of us. The main thesis for today is bullish, closing above the 451.03 with a projected high target of 451 to 455. The alternate thesis is bearish, closing below 451.03 with a projected low target of 446 down to 441. I gotta say something right here. Because this is a highly volatile session, volatility is being pumped back into the market. It is highly likely that we see a large portion of both theses play out today. We could see some really lows, and we could reach for some really high highs today. Usually the way my thesis works, I'm talking about the closing price, where we will wind up and close it. but it has no bearing on where we could visit to in between that time. So I just want you to be prepared that we could run and see an extraordinary range today. The current channel we are in is 453 down to 425. The minor channel being 453 down to 443. We may see every inch of this minor channel today. The next minor channel below is 443 down to 431. With that, let me bring up the scenarios for today. All right, the first scenario today, the probabilities are pretty much the same for the first two. Our trend day down and the rounded reversal day type structure. However, today is not a normal day. It is an FOMC day. And like I said, I expect an extraordinary range to be covered today. On our trend day down structure, we open gap down and start with a slight rally back toward the previous close. We find resistance on or before that previous close, then begin the downtrend for the morning. We find midday chop either around the possible queen or king resistance. We find this should be support. Let me fix that. All right, now that I have that fixed, this is not going to be the typical trend day down. The normal trend day model today, it could take all the way up until 2 p.m. to try to fill the gap and then resume the downtrend. So normally here we have this golden window in the morning. The whole golden window could be up, making it seem like we're in a uptrend day. However, once the FOMC minutes are released, then we're going to get that head fake up, down, and then we figure out the real direction from there. And that's when we could actually resume the real trend down. So that's what I will be preparing for. This is not going to be the typical day, and it will be very volatile. I can't say that enough right now. But this is scenario number one. Let me get to scenario number two. All right, the second scenario is our rounded reversal day type structure. We have a lot of momentum headed to the downside, and once we hit that open, we could continue that push lower toward jack or queen support area, even the king support area at this point, because of the extraordinary range that I'm expecting today. This is not the normal rounded reversal day structure. Because of the FOMC minutes at 2 o'clock, we're going to get a burst of energy here at 2 p.m. where we try to figure out where we're going. First move is usually a head fake. If we continue down, we'll see probably just as an expansive move up, and then kind of level out, and then we'll figure out the direction where we're going. And it could be that way, or it could continue lower. So we have to be prepared for these vice versa scenarios today. So that is the rounded reversal day type structure. All right, our last scenario is the expansive range day structure. We could look to set a decision area, lower boundary around the jack or queen support area, this should say. All right, let's try this again. Expansive range day structure. We could look to set a decision area lower boundary around the jack or queen support area before chopping higher, and at some point trying to revisit the lower boundaries today. So again, this is not going to be the normal expansive range day structure because of the FOMC meeting. So we could come in, continue down until the cash open, and we start getting a lot of positions covered, taking us all the way back up above the previous close yesterday, and seeing our lunchtime chop somewhere around that queen resistance area. We make it back up here, and then around 2 p.m. We're going to get some extraordinary movement where we may get a head fake up, down, level out, and then into the real move. The trend that's going to continue for some time. So that's what I'm looking for. That's what I'm trying to be prepared for. You're going to see an extraordinary range at some point, and usually we'll see after everything kind of settles out, we'll see the trend that's going to hold for the next period coming out of this once everything shakes out. So that's it. As always, in this day, more than any day, please understand and know your risk, because we could see your risk could be stretched past its capacity on a day like this. So please be careful. As always, wishing you a positive trading day. Please be careful today. Hope you have a great one.